You're listening to the Applied Blockchain Podcast, hosted by Ben-Ari, founder and CEO of Applied Blockchain. Join him as he sits down with global experts to uncover how blockchain is driving real-world impact. Today's guest is Emma Landriault, Executive Director, Product for JPM Coin within Connexus Digital Payments at JPM Morgan, where she leads the development of token and instrument-based digital money, drawing on a background in blockchain product leadership across banking and digital assets.
Emma, welcome to the Applied Blockchain Podcast.
Thank you for having me, Adi.
Please introduce yourself. Tell us a bit about your background and what you do.
I am Emma Landriault. I am the product lead for JPM Coin, which is our recently launched deposit token on Base. I sit in the Connexus digital payments team, and taking a step back, Connexus, it is a subunit within the payments business at JP Morgan, and we are broadly broken up into kind of three different stripes, and we've been active in this space since 2015. The three stripes are Connexus digital assets. So our tokenization infrastructure, we focus on providing infrastructure for our markets teams and also deploying our own applications, really focused on the tokenization of real world assets. Very recently, we launched the Connexus Fund Flow with our private bank, showing the ability to create operational efficiencies in tokenized alts. We then have the Connexus Link Network. And the Connexus Link Network is everything that is blockchain-based information movement. So they run at a network of multiple financial institutions who will verify essentially payment information across one another. Things like payer, payees, formally check matching as well, but really with the goal to be able to kind of reduce fraud and reduce kind of informational discrepancies across various institutions. And last but not least, where I sit at the Connexus digital payments team, and we focus on everything that is blockchain-based money movement for the bank.
Okay, and your team, I guess, is the first of these applications to go fully onto a public chain. It was a JPM token, is that right?
With a fully launched product, we are the first ever bank deposit actually to go onto a public blockchain ecosystem. It is currently a deposit token in US dollar, which is issued on Base. And so my team focuses on building that product out and focus both on that kind of product execution and strategy and where we're going to continue to take this.
Okay. Wow, that's a lot. So let's start with what your team does.
Yes.
Right? Maybe tell us a little bit about what that really means in terms of the digital tokens, money movement, and so on.
Definitely. So from the Connexus digital payment side of the world, we have launched the first kind of blockchain-based money movement network within the bank back in 2019. This is an account-based solution where we provide essentially deposit accounts, as you know and love, the general deposit accounts on an internal private permission blockchain. So on a blockchain-based infrastructure. This allows us to have both the ledger and the payment essentially collapsed into one ecosystem, and we can help our clients move money 24/7 across multiple different locations in the world. We have over 12 locations and 3 different currencies, which we're offering this in. And it's really built, I guess, over time, has built a strong payments footprint for the business. So we have processed over 3 trillion on this rail, which I think is one of the more higher volumes, right, for permission blockchain applications. And we have also on average are processing around 5 billion daily. And this is really being used by corporates, financial institutions, and other institutional clients who need to move money across our footprint, right? So they may make counterparty payments, or they may even make intra-company payments. But as you can imagine, if you're a corporate treasurer and you need to move money across Frankfurt, London, Singapore, Australia, New York in a day, many of those jurisdictions have, of course, different time zones, so limited operational overlap, some up to 4 hours, right? And different holidays, different cutoff times, right? All of those things that create friction, right? When you're actually moving money globally. So we really introduced this rail to help manage liquidity in a more real-time fashion. So clients can make, near instant payments on these rails. We also recently launched FX, right, on those rails. So multiple currencies where they don't just actually make payments across these footprints near instantly, but can actually also convert the various currencies in which they're, transacting in. So that was really kind of the initial footprint. But as a continuation of that, and where I sit, is that we've also very recently launched JPM Coin.
So just before we get into that, to understand everything you've explained up to now, it's really using the tech to add another layer, I guess, of internal infrastructure to give these clients this extra capability. But just out of curiosity, does it, for the treasurer, does this feel the same? Is there a difference from their perspective, or is it more the plumbing underneath?
It's such a good question, because I think part of what we wanted to do here was use the technology for the operational benefit it can bring. So today, for existing JPM clients, they have modules, right? UI modules that they use for all of our different products. They can use these same modules, integrate via API, or even integrate via the Swift network to make payments on this platform. Right? So by design, what we're leveraging here is the fact that DLT can help us make real-time payments across our subledgers, as well as the ability to build in programmability. Right? And now we have treasurers, excitingly, who are, all day long using if-then statements to manage their liquidity on this rail. We can provide them predictions, right, on how that liquidity is being managed. And very recently, we kind of announced that BMW came on to do cross-chain FX payments, and they actually coupled that with programmability. So they were able to do auto balance checks and then go and make the FX payment based on the conditions of those balance checks near instant, right, across euro and US dollar. And I think that must be something you see as well, right, a lot with your clients, is that that operational benefit can help actually drive the use cases and usability.
100%. And I think the treasury management use case is something that's really come to the forefront now as well. I think even for smaller companies, this becomes relevant with that automation layer on top and so on. So, okay, so let's take that. So the next step, which is the JPM Coin. So please explain.
Of course. So, I think the next natural step for us, right, was to bring these commercial bank money solutions into the public chain ecosystem. So, sometimes I sound like a builder, other times I sound like a banker. Our clients, right, are keen to engage in that ecosystem. I think the ecosystem, the Web3 space, is developing. There's obviously a ton of opportunities for net new payment flows, right, to make payments faster. We're seeing that with the stablecoin market and what's been dubbed stablecoin summer, right? Payments driving a lot of those use cases, but also as more institutional grade real world assets are starting to be tokenized onto public chain, there's an ecosystem. Frankly, I think what we've seen is that from a base liquidity perspective, stablecoins have largely been really the answer, right? From a base liquidity perspective, but particularly for institutional clients, their risk appetite doesn't always align with the risk of holding significant liquidity, right? Large ticket trades, significant value in stablecoins, because there is a difference in terms of the kind of risk management practices around the stablecoin structure, right? And even the asset backing. On the deposit side, it's not just asset backing, but also all of the multi-layer stress testing, capital management, prudential liquidity ratios, consolidated balance sheet reporting, right? There's so many layers of risk management practices around deposits. And so I think, and not just that, but also, I guess, the certainty, right? There is a balance sheet certainty for treasurers who are looking at what this means to actually hold significant liquidity on their balance sheet. And if you can aggregate that as part of a total position of deposits, right, that becomes simpler to actually manage from a treasury perspective. So it can bring balance sheet certainty that can bring, again, that assurance to clients of what they're holding, and a new way to hold what is just US dollar demand deposit liability on the public blockchain.
Okay, so what is the JPM token? How does it work?
I realize we're already jumping into it, so maybe it was to take a step back, right? So the JPM coin, right, with the token ticker JPMD, is a deposit token. So what this is a token, essentially an ERC20 with a few custom functions, as you can imagine, but an ERC20 token that represents funds which have been deposited with the depository institution. So in this case, with JP Morgan. And those funds are issued in the form of a payment instrument, which is currently sitting now as smart contracts on Base. So we have deployed this on Base, which is an Ethereum layer 2. And it is the function where it's an approved listed product, which ensures that once it's issued to a client, they can trade it with any other approved listed or permissioned clients, right? So this is a permissioned token, but it is a deposit, and it is designed to have the same technical capabilities from, real-time transferability and a composability perspective as stablecoins, so that it can be transferred natively on chain all day long, right? But while maintaining the kind of assurance that a deposit could bring.
Okay, and presumably it can be transferred to the other holders, being JPM clients.
So it is structured to, currently we've rolled it out as a product that can be transferred among JP Morgan clients, but it is structured to support a distribution model for clients, underlying clients. So this would allow us to grow the boundary of transferability while ensuring that there's always KYC assurance of all of the parties who have entered the ecosystem and who are engaging with the token. And so really what we're doing is kind of moving permissioning from sitting on the protocol level. You know better than I do, right? That we've seen that among many, many institutions. So moving that from protocol level and bringing it to kind of the token level so that it can be deployed on public chain, but used along these authorized participants where we can assure who those parties are.
Okay. So I guess just to take a step back and make sure I've understood this. So it's issued on a public ledger. The token itself is I guess an extension of ERC20. And that means that it should be composable with, it should fit in with applications maybe that use ERC20s, but all within the constraints that the token has, right? Which is getting the customer list and then presumably, some other controls.
I think Adi picked up on a really important point, right? Which is and as a product lead on this is one of the areas I love to talk about, but it is designed to be by design interoperable with the existing infrastructure, right? So composable with other smart contracts, which could enable swaps or delivery versus payment of other ERC20 tokens, right? Today, our clients are using this in their existing wallet interfaces. And I think that's a big kind of driver and a principle from a design decision perspective, because if you think about this, the way that we look at it is that this is a new and an alternative type of base liquidity layer that will be suitable for institutions, right? I spoke about why this is a strong from a commercial bank money perspective, but it can also do things like bear yield, right? Because it's just a deposit. It can be eligible for relevant deposit insurance schemes. So I think from that view, it's powerful when you also bring it into this kind of wallet interfaces where we have existing players managing their own on-chain treasuries, and now they can have a dollar asset, right? A JP Morgan dollar deposit that sits in that same infrastructure to continue to manage their liquidity on-chain in an integrated fashion, but also be able to off-ramp that really quickly into the account-based structure. One of the things we get often asked is how does this work with the blockchain deposit account offering? And I think it's actually quite compelling, right? If you were managing liquidity on the public chain, right? And then also able to very quickly offer up that liquidity into an account structure, I actually think that this unlocks something new, right? Which is that if you are going to bring significant liquidity into the public chain space, very likely, especially for traditional institutional players, there's a treasury behind all of that liquidity who needs to manage their balance sheet, right? And keep an efficient ratio of where their capital is, which depository institutions it's sitting with. And so that means at the end of the day, there's things like notional pooling or lending to repo markets overnight, right? So in order to actually integrate, large scale liquidity into the space, it's important that those fit those existing structures, which tend to be these integrated account-based end-of-day processes, which likely will change that quickly to fully on-chain. So I think that's also something that we see as one of the benefits to be able to bring, really focused on, institutional grade and larger liquidity value.
Okay, so processing that in my non-banker brain, that basically means that let's say I'm a corporate treasurer, I want to be able to have the flexibility of having this money available on this type of platform, then also to be able to bring it back and do all the other things that I normally do with it, which might be out of hours, using some instruments to earn yield overnight and so on.
Exactly. For the Web3 use cases. I mean, the other part of this is, and I'm sure that maybe I'm curious to hear your view as well, but we have deployed on base and we're looking right now at some of those Web3 ecosystem use cases, but nonetheless, this structure can also be used on private chains. So we do also see that it's not the core benefit is the way that the asset itself is structured and the characteristics that it can bring. And although it's on public chain now, it will continue to be on public chain. We'll also see benefit in moving that into private blockchains. And I think that convergence will continue.
It's interesting, but I think the most interesting, first of all, I think it's a huge step. It has to be recognized for that. I think it's a huge step because what you've basically done here is created this token which is fully integrated with your service and gives you the controls that you need, but you've done it in a way that it's effectively running on rails that you don't control, right? Which is, I think, this is a huge step, which is interesting, right? Because it's an open network and is composable with additional applications, which I think is really where this stuff gets really interesting, because then it's a token and a form of money that can be used with whatever applications people dream up. right? And deploying these public blockchains within the constraints of the token, but it starts to edge into that world, which I think is huge.
I guess it comes back to the kind of fundamental part of Web3, right? Which is really this idea to have composability and to make, the movement of money as seamless and easy as it is to send an email, right? And so I think like part of this will be building out that composability. To your point, this is a permission structure. It cannot be thrown into any pool, right, by design. And I think that part of the roadmap will be to continue to build out the composability and the use cases with institutional.
I think technically it's integratable. Then that is a question of use cases, applications, user bases, and so on, right? How that works and whether that serves a particular use case of an application and whether that could be expanded upon and so on, right? But you've done the technical integration with the public chain, and I think it's very interesting to see where this goes. Yeah,
so it's definitely an exciting one in that way.
And then you talked about potentially integrating with other institutions in the future. Is there a view of what that looks like?
Yeah, it's a really good question. So we actually recently announced a collaboration with DBS in Singapore. Of course, they've also been, a bank who's been in this space for quite some time. And we are looking at an interoperability framework for deposit tokens and tokenized deposits. And I think that this will be part of building out some view of how that interoperability can work. Because I think when we think about like fungibility in this world, depending on what seat you're sitting in, right, there's two different ways that we can think about fungibility, right? The first is technical fungibility, and the second is economic fungibility. And Adi, you and I have talked about technical fungibility a lot before, right? I'm very happy to go into the work that we're doing in that space as well from a token standard perspective. But I think first to talk about the economic fungibility is that we need to ensure that multiple banks' deposit tokens can interact, right? And I think our view is that this space will not disrupt correspondent banking, as it were. We have this idea of M0 and M1 money, right? M0 being the central bank money, M1 being the commercial bank money. And our view is that, we will be able to have this interoperability with, banks' clients holding one another's deposit tokens. But ultimately, once you get into the kind of off-ramp at clearing and settlement side of the world, that fundamental relationship, which maintains things like singleness of money, will continue to coexist, because correspondent banking is not just about getting to, moving a payment to a specific corridor, right? That is one part of it. There's an operational aspect of correspondent banking. But I think the other part is about access, right, to that relevant central bank's currency and to that relevant central bank's central bank accounts. And so for that, I think our view is that this will continue to find finality through that M1 and M0 money process, because that fundamental relationship of access will continue to exist with relevant currencies. So we'll continue to build that out from an economic fungibility perspective. And I think one of the exciting things is like, today we have this idea, like I said, of M1 and M0 money. And I think we don't see, deposit tokens completely taking over like a stablecoin market, right? Then maybe stablecoins just become the privately issued money, really good for things like retail payments, right? And that becomes your N2 money, because stablecoins still need to off-ramp. And where do they off-ramp? Into commercial banks, right? And then commercial bank money finds finality into central bank money. So I think that's how we continue to see that space evolving. So that's how we think about economic fungibility.
Yeah, no, it's this integration. I think they kind of you're leaning into it, right? Rather than just staying in your existing position, you're leaning into it, which it enables integration. And I guess the way I'm thinking about it is, we look at card payments. Well, card payments aren't instant settlement, but we kind of treat them that way as a consumer. And actually behind the scenes, there is some other settlement going on through the network and different time frames and so on. And so maybe that's another way of thinking about this, is that on the ledger, you've got one level of assurance, and then behind that, you've got other things going on in terms of sort of the underlying settlement and the link to central bank, once money to central bank money.
Yeah, I think that relationship will be defined based on the asset type. Again, technical fungibility, these things will look very similar, but aspect of it will be defined based on type of asset it is and where that asset finds finality, right? Or where that asset finds integration back into traditional fiat money. I don't like to use the word fiat, because I think in this case, the deposit token is fiat itself, right? It's a single currency, right? But nonetheless, I think where it finds that finality maybe into that account-based format, right into the traditional banking routes.
Okay, good. And you mentioned the technical, and maybe take us through what you're doing there as well.
The second prong, I guess, which is how are we ensuring that there are harmonized and common ways for banks and really, frankly, regulated institutions to think about issuing these assets, right? And we've seen lots of different attempts at things like building out standards. We published a research work, right? A paper based on research work that we did with the MIT DCI, so the Digital Currency Initiative, that are focused on building payment token standards for regulated institutions who want to come in and issue these tokens. And these could be not necessarily just deposit tokens, but I think we took the view that regulated institutions, whether they're central banks, commercial banks, NBFIs, PSPs, right? They all have some level of common compliance and regulatory requirements that they have to be, right? And so we tried to do some research to map out what are the core foundational requirements to build these tokens in a way which are, one, compliant with regulatory standards, two, usable, interoperable, right? And able to really maximize the usability that ultimately we're all doing this for, right? Issuing these tokens for. And so with that, we mapped out core requirements, essentially things like transferability, things like gasless transactions, right? Things like admin controls, right? Being able to apply remedial actions, because if there's a sanctions hit, you may need to seize a token, right? And you map out all these requirements against the existing EIPs, right? That exist. Trying to take a slightly different view, which is that, ISO standards took 20 years to make. They're expansive, they're broad, and there's a lot of institutions who are not happy, right? Or who need more, right? And there's continuous.
So I remember in the early days, I joined the ISO.
Did you?
But I disengaged very early as well.
And it's not, it's great standards. We use them for payments all the time. Don't get me wrong. But I think while we're at kind of a nascent stage of this, our view was that we should be focusing on very narrow and composable standards and only innovating where things are missing for institutions. So we published a GitHub as well, kind of showing an implementation of this. But really what we acknowledged is that things like ERC20 work really, really well for transferability. Things like 4337 work really, really well for gasless transactions. So they work for these specific functions. So we should be building payment tokens based on those functions to mean those specific features. And we acknowledge two areas, right, that really need further work and potentially new EIPs or work with the industry, and we'll be committed to working with the industry on these standards. First is admin controls. So like I said, remedial actions, being able to seize or freeze tokens, right, as needed. That's one. And then the second was actually bank to wallet API-based standards for communication. Because our view is that as compliance continues to evolve, we will want to issue attestations on chain to read through, who a client is from a KYC perspective, so identity side of the world, but also things like ability to transact up to certain amounts, ability to engage with its certain use cases, and things like on-chain attestations can help us do that. But who is your root of trust? Who is issuing the attestation? Who is allowing the client to transact? In this case, based on the regulated payment token space, it would be the issuer. So what we need is a clear way for all of your wallet infrastructure providers of the world to be able to engage with banks to get that verification. And that's one of the areas that we will also continue to work with the industry on, because I think our view is that we need to continue to evolve in those two spaces.
Right. That latter one is definitely, it's a problem that a lot of people have looked at and are still looking at, right? The whole attestation of identity and KYC and so. So did you find much out there?
Yeah, it actually, I was going to ask you something similar, right? Because I think, so in the work that we did, we focused on building a net new set of APIs, basically, and MIT led the code development and publication of this piece. So it's on MIT's GitHub, but talking through actually how can you do that? And then once we get on chain, whether you use something like Ethereum attestation service or we work through building out our own attestation capabilities, I think that remains to be seen, but ultimately building out that integration itself. But I think that's, again, a starting point. We intend to continue working with other institutions in this space, but also the usual suspects from technology provider perspectives, security architecture firms, etc., to help build out those capabilities. But I maybe ask me about to you, because you have so many clients engaging in this space. What are you seeing, right, beyond the kind of digital, beyond just verification in terms of digital identity, verifiable credentials?
We're just seeing definitely the need for this, and then lots of attempts that are not, they've not been brought together yet. Right, so there's things like DIS standards, and there's various protocols that have attestation services. There's zero knowledge proofs as well. So we've seen just lots of people kind of having to go at this. I think it needs to be brought together in some way. I was going to say the approach you've taken is quite interesting, because I think JPM Ethereum back in the early days, through the core work, taking Ethereum and then kind of enabling it for the private blockchain initially. If you look at what's happened with stablecoins and the standards out there have come from the ground, right? They've come from developers and that kind of open ecosystem. And I think it's interesting that rather than try to top down standards from the industry, you're actually playing into that. And I think it's super interesting, because I think that's where the innovation, that's kind of the, where all the innovation's happening, and you're playing into it. I mean,
Exactly. That was definitely the approach here, right? Because I think we just don't have time to build top-down standards. The space is moving quickly. More issuers are coming into the space, especially in the last, 6 months, right? From an institutional perspective. And so being able to build really from the bottom up, right? And also maximizing interoperability. I think those are kind of two of the core principles that will help us continue to grow in this space, both have, from a JP Morgan perspective, but also all of the other institutions who are looking at doing these things.
So I think the technical side, I think, is it really is if you played into the open innovation that's happening, and then I guess they'll then need to be aligned with the other institutions on some of the settlement of the coins, and also on the KYC and identity.
But even on the technical side, right? We often say and when we were conducting this research, this was always intended to be a starting point.
Yeah.
Right? Even our first implementation, it's intended to be a starting point, but it will take industry engagement. It will take other parties coming into issue and continuing to evolve, right, on this work to get to the place that we're comfortable with from an industry perspective. So I think it's really a starting point.
Can I ask a question? This might be a stupid question. I'll ask you a question. So if I'm an application developer and I want to develop an application that handles these JPM coins, so I could deploy a contract onto Base, and as long as it could handle these coins, I mean, it could be a contract that does something with them, as long as it doesn't break any of the, I guess the functionality of the coin itself, and that could work.
So currently, because it is an approved listed contract, this means that there would also be permissioning on the contracts which can engage with it. In theory, yes, from a technical perspective, that interoperability is built in. But of course, we are continuing to roll this out in a very, strategic and meaningful way.
Presumably, the token couldn't be sent to any account, to any contract.
Exactly. It's not, the transferability is more limited, but by design. Right? Yeah. Because you're building a trust ecosystem on the public chain and of the parties who can engage with.
Emma, can I ask you a bit about your background?
Of course.
How did you get into this? What was the path that you've taken?
It's such a funny story, actually, thinking back to it, because I realized how much I didn't know at the time. So going into the space, right? I was working on a fintech. And this was, I would say, 2017, 2018. As you probably imagine and remember at that time, because you've been in this space for even longer than that, right? It was kind of the day, the resurgence of, these track and trace use cases that were coming up. Crypto, was starting to have its first really big kind of moment. And so, of course, working at it was a fintech startup and working in that space, you're thinking okay, what is this? How does this work? We would be topics of these roundtable and all hands meetings we would have. So I took a bit of time and just started reading. And, interestingly, I think, and maybe different than a lot of parties who started looking at this space, is that I first didn't understand. If you don't come from a decentralized computing background, it took me some time to really actually deeply read and be fundamentally, what is this? Right. And I came across a book called A Blueprint for the New Economy by Melanie Swan. It was a textbook at the time. Right. But it was the first time that I actually heard laid out, this is just a new network. It's a transparency driven network. And it's a network that can move, yes, assets, but crypto was completely abstracted away from it. It was how are we moving assets and information across this transparency?
Yeah, I mean, this is kind of what I'm really interested in. It's the tech.
It's the tech, right? And so that's actually what, that was kind of throughout that book. I think it was re-articulated in a way that really made me understand, this could actually rewire and re-architect the way finance moves, but also just the way that information moves. So from that moment on, I just felt super clearly and passionately that this was a space that I wanted to build in and help kind of further building transparency driven networks. Right. And so that was really what got me into the space. I think officially, spent some time with a crypto startup. I then went over to NTT Data and was consulting. I'm sure you know that team very well.
They've security audited our platform.
Yeah. So I was working with their blockchain for banking practice. And that was a really cool time as well to get to just really have the opportunity to work on all of the projects that were kind of, blooming at that time. And I'm sure you remember, but it was like from crypto custody to cross-border payments to digital identity. Like it was that start of like really how are we thinking about enterprise blockchain, right? And where are these like first sets of networks and POCs coming up? So it was a super exciting and cool time. And then I went over to Scotiabank in Canada and led their kind of product side of the business from a blockchain and payments perspective. And then ultimately, came and joined the team over at Connexus. I was hired initially to really look at building out deposit tokens. And so I thought that being able to build a token format of commercial bank money that sat on private and public chains was going to be critical to the space, because my entire experience working across these various institutions was, and you probably remember this time, but you would see really cool like track and trace. You would see tons of bond issuances and security issuances, but there did not seem to be like a form of cash, right? So when I had the opportunity to join the team over at JPM, who had already been innovating in the cash space and to build out this piece, I just felt like it was such an important thing to do from the industry. So it was, the rest is history.
Yeah. Okay. Amazing.
Wait, Adam, tell me you were like, what way?
I was actually working at Lloyd's Banking Group, and I went for coffee with a friend who told me he was trading Bitcoin, and this was 2040, and I knew nothing about trading, but I am a tech guy, and Ethereum, the code base had just become available to play with. So there's no network that you could just start building with it. I came across that and that just blew my mind. And so I'm still recovering from it. But it was smart contracts, and it was really understanding, as you said, it was the tech behind it. It was the automation, the autonomous nature of the contracts, the efficiency, the technical efficiency. That's kind of what I've always seen in it. And it's also interesting because that was a decade ago. And we get a lot of people who say, why isn't this more widely used and so on? Why have these use cases all materialized yet? And for me, it's still very early because there's a lot of things that need to be in place. And the primary one was the payment token. Right? It was a payment token. Because again, looking at the tech efficiency, I think about it on business perspective, business use cases. What could businesses use to pay each other to then build these applications on top? And that's to be work in progress. And it's obviously been accelerated the last year or so. I think this is a big move as well. So I think this, is something that's certainly being excited, of course, the industry now. And it seems like a small thing, but it's not, right? And it'll be very interesting again to come back in 2 years, 4 years or whatever. It's okay, what happened from that? What was the butterfly effect on that one thing? So yeah, I think it's super interesting.
So we have an exciting, I think, just as an industry, right? An exciting few years ahead for sure. We've definitely hit, my personal view, I think we've definitely hit a convergence, right? Because you are starting to see more institutions come into, the public chain space, whether it's through RWAs, right? And issuance of assets, issuance of stablecoins, things like deposit tokens, right? We're starting to see like institutions really take the tech seriously and also start to move away from like everything needs to be our private island, which has been very helpful for some use cases. I think our blockchain deposit account offering and Connexus digital payments is a great example of like where we can really use and actually benefit from private permission chains. So I don't think that changes, but I think we are starting to see recognition as well that there's a rich and open ecosystem of, different applications, different users and financial services that can be on the public chain. But at the same time, I don't know if you've been seeing this as well on the crypto side, but from just being in the industry and also seeing like also this might not be the right word, but like equitization of crypto a little bit. So you're starting to see digital asset treasuries come up. You're starting to see on-chain structured products, right? So I do feel like we're at this like interesting convergent point where you're kind of getting a little bit more of one another's flavors on both sides of the ecosystem.
Yeah, definitely. And we're getting company treasuries, as we touched on beginning, start to, okay, what can this do for me? Emma, can I ask all I gets at the end, have you got any sort of sources of information that you've used over the years or something you'd recommend, maybe a book or, I don't know, a video or maybe another podcast? It doesn't have to be about this topic. It doesn't have to be about blockchain. Just something in life that maybe.
Of course.
Yeah.
Yeah. From the blockchain side, I think I am very privileged to have an amazing JP Morgan markets team and Connexus digital assets research team who keep us up to date, right? Very, very well. But outside of that, I do like to read as well some of the other market research reports. So of course, Coinbase, kind of Galaxy, right? They continue to have these research reports. Our friends at Standard Charter, right, have really good research reports. So I also like to kind of keep a bit of a view from the industry as well. And then the BIS, of course, any BIS bulletins, I think it's really helpful in kind of shaping the thinking, right? So those are things that I'm really tapped into. Then broader kind of industry news wise, I mean, from a podcast perspective, I'm like an FT news briefer listening every morning. You to start, I get ready listening to it. So it's a good kind of little headline view. And I love Hard Fork as well. You must know Hard Fork. It's the New York Times every Friday. That's my favorite podcast. That one's also really helpful just to hear about what's happening in the AI space. I think we have yet to really see a big convergence of crypto and AI. We're starting to with agentic AI, some of the stuff X402 that Coinbase is doing, but I think it's an interesting one to stay up to date on.
I know we get asked about this a lot. I think that's also that could also come on the treasury side as well.
Yeah, I think right now we've seen a lot of those agentic AI applications being kind of browser based, but it will grow. We'll start to see proofs of concepts and use cases, right? And potential applicability. It just becomes a question of how comfortable are you right now letting large language model make decisions on your treasury? But I think it's interesting, right? Just from the core kind of technology perspective. So that's one to help me.
It's how do we optimize, but that could be one of the tools.
Yeah. So those are kind of my go-tos for staying up to date, both on the blockchain side, but just generally across tech and markets as well.
Okay. Amazing. Emma, thanks.
Thank you for having me, Adi.
Thanks for tuning in. Catch every episode wherever you get your podcasts. Follow Applied Blockchain on socials for the latest insights and explore our layer 2, Silent Data, at silentdata.com.